With investing now just a tap away on your phone, more and more Canadians are turning to apps and robo-advisors to manage their portfolios. These platforms promise ease, speed, and often little to no fees. But with all that convenience, a key question remains: where does the human advisor fit in? Unlike automated platforms, human advisors can provide personalized guidance tailored to a client's unique goals, risk tolerance, and life circumstances. Joining me now to break this down further is Brendan Caldwell, Director at Caldwell Securities Limited. Brendan, thank you for the time.
Thank you, Teresa. Good to hear your voice.
Now, in what ways can a human investment advisor offer value that investment apps just can't?
Well, that's a funny thing. Some years ago, we hired a person who'd worked at one of the well-known discount brokerage firms, one company that's known for its ads where the younger clientele has a certain supercilious attitude. You're not still dealing with dad's guy, are you? I'd heard that one of the banks was going to do an ad where they flashed to dad's guy and mom and dad were doing very well. But I digress. And his question to me was much the same. And what do you think of our ads? Was his question. And I think the answer to both questions is the same. In our industry, in a world where there has been a race to the bottom in fees and ease of access, to the extent that there is going to be a personalized service, an individual involved, a person, then one has to add value and be seen to be adding value. So you ask in what ways? I think the answer is much the same way as in what ways does a pilot on a plane add value when much, if not most, possibly all of the functions can be done either remotely or by a computer on its own. And I think the answer is we really want someone flying there with you who knows what they're doing, who has a vested stake in my arriving safely. So I think a really good investment advisor is flying with you, knows what they're doing, and has a vested interest in your arriving safely. So I think that getting with an advisor whose interests are aligned with yours, that you're pointed in the same direction, means at the very least you have someone who cares and is engaged. I do think that in life in general, most people don't feel heard. And they have trouble saying the things that are hardest to say out loud to another human being. To the extent a good advisor can help a client articulate their hopes and dreams and fears, I think they're halfway to doing their job anyway. Just to be able to say out loud to another human being, this is what I really want. This is what really matters to me. And you think, oh, how hard can that be? Well, when it comes to matters of money, I do think that parents are much more likely, even in the most religious circles, to talk to their kids about sex than they are about money. Most of us are half-remembered arguments that our parents had about money. It's a source of great consternation, great stress. So I think to the extent an advisor can help draw a client out so that they can speak what really on their mind, and to help that client know that they've been heard by putting what they've said into a proposal, paraphrasing, reading it back to them, talking to them as though they'd been heard well. I think that goes a long way because then you really understand what the game is, what their objective is.
And I mean, you bring up a great point how some people find face to face conversation very difficult, not you and I, of course,
Hmm.
but especially when you're talking about money. So, how do you personalize investment advice for a client compared to how a robo advisor could build a portfolio?
Well, I think that there are pros and cons to both, and probably for some clients, particularly those that don't want to. I I joke that stockbrokers are the third ugliest profession after hockey players and rock stars. So if you don't want to see us face to face, I more than understand. That's why most of our business is done over the phone. But when you're talking about a client, a a robo advisor is going to give you some mix of whatever the flavor du jour is. And it may be an exchange traded fund, it may be a mutual fund, it may be some other structured product, but it will be similar advice for everyone. Well, at least it means if you're early in, all the advice the robo advisor will give to the subsequent clients will push up the investment you've had already. But it creates the bigger problem. The efficient market hypothesis was based on the idea, portfolio theory, modern portfolio theory was based on the idea that if you just bought an index, you'd get the benefit of millions of investors making millions of individual decisions. To the extent that it is now a robo-advisor using a similar algorithm, as advanced as it might be, you are much more likely to get homogeneous portfolios, everybody owning the same thing. And what we've seen, whether it's tulip bulbs or the S&P 500, when everybody starts doing the same thing, there becomes a certain price risk and a greater opportunity to make money doing something different. So what we've tried to do is develop strategies that are a little bit different than the market, that have a very low correlation to the index. Because to the extent that the people are doing indices anyway, either in their own portfolios or in the world at large, we think there's some value added. And this can include not just public markets, but private equity as well, which is very unlikely that robo-advisor is going to have a private equity component, at least not at this stage, to most people's portfolio, even though that's where most of the very wealthiest have at least a portion of their money allocated.
And when investors are drawn to high risk trends like meme stocks, how might an advisor respond differently than to an app?
Well, again, I think having a stake in the game matters. So, as an advisor, I tend to advise my clients. It's not always, not 100%. Some clients want to do something different, and we'll work with that. But I tend to advise my clients to do the very thing that I'm doing. It's my pilot in the plane analogy. I have a vested interest in their success because their success and my success are in tandem. We're owning, in most cases, very similar things. When it comes to a high risk thing like a meme stock, well, many discount brokerage firms will not let you buy um, certain investments. They're just verboten. They can't do it. So an independent advisor has a greater degree of flexibility, generally speaking. So there's that. So you might have thought that I would be more likely to shut it down. What I would be more likely to do is moderate it. Where people get into trouble is not making small, high-risk investments. They get into trouble making large ones. Failing in a small way is no big deal. At least one's learned something. And if it ends up being a success, well, that's great. So if you put 5,000 of your $500,000 portfolio into a meme stock and 5,000 goes to 50,000, well, that's great. But if you put 50,000 in and it goes to 5,000, well, most people feel less bad about missing a profit than they do about taking a loss. Most people feel that way, and most people are more likely to want to avoid a loss than try and make money. So it's just talking and understanding who the person really is. And I think AI is going to have to be a lot better than Blade Runner for it to actually get to the bottom of what people's real risk tolerance is.
Now, a lot of people before signing up for things will look at what the cost is, and many apps advertise low or zero fees. How do you justify the cost of working with a human advisor?
I don't know if it was Steve Jobs, but let's apportion the quote to Steve Jobs. If you're not paying for a product, you are the product. Nothing is for free. So if you are dealing with a free advisor, they are making money on you in some way. When it comes to trading stocks, some discount brokerage firms will offer little to no fees. They will usually be taking the other side of the trade. Well, that's quite the opposite of what I began by saying. You want an advisor that's actually aligned with your interest, not someone that when you're buying, they're selling, and vice versa. Why they do this is to make a little bit of money off of the spread. So your trading helps to the firm that you're doing the trading with to make money, unless you're actually paying for them to be on your side. And again, for most people, I think having another human being, even the most sophisticated investors, should have another human being to talk to make them question whether what they're doing is right or wrong. There may be some investors for whom a robo-advisor is the best course of action, and I wish them every success.